Hello and welcome to Money Minutes, your quick guide to making money. My name is Kayezad Adajania. Today we are going to talk about fixed maturity plans, that's FMPs. Now, if you have been investing in mutual funds of late, you would have noticed that a lot of fund houses these days are launching FMPs by dime a dozen. Every day you will find some of the other FMP in the market. Now, FMPs have been popular these days because interest rates in the economy are high. So when interest rates are high in the economy, debt instruments are quoted at high yields, and fixed maturity plans or any debt funds that invest in these high yielding debt instruments would naturally give high returns to investors. Now, as per statistics provided to us by Value Research, close to about 10,000 crore worth of inflows have come into FMPs in the month of July alone. This was up from about 3,000 crore worth of inflows that came in June, and about 1,000 crore worth of inflows came in the month of May. So you do realize that FMPs have become very popular these days, and many fund houses, whether large or small, are busy launching FMPs these days. But before you decide to invest in an FMP, let's take a quick look at what an FMP actually is and what it does. FMP is a debt fund. Now, by debt fund, I mean to say that it invests in debt instruments and fixed income instruments. It is a closed-end fund, which means that the fund house, the FMP, for instance, whenever any FMP comes, it's a closed-end fund, which means that an FMP is either a 1-year term or a 3-year term or carries a 5-year term, which means that once you invest in this FMP, technically you're not allowed to redeem from it. Although these FMPs, although they are closed-end FMPs, they are also mandatorily listed on the stock exchanges, which means that if you want to prematurely withdraw from your FMP, then you will have to go to the stock exchange to get your money back. Now, FMPs are per se good mutual fund products, and we in Mint Money have recommended you FMPs time and again, but it doesn't mean that FMP is meant for everybody. There are certain situations that you must bear in mind before investing in an FMP. These situations might tell you to not to invest in an FMP. So let's take a look at some of the nitty-gritties and the intricacies of these FMPs, and in what circumstances you may not want to invest in an FMP. First of all, basically, you have to mind the lock-in. So, which means that it's a closed-end fund, and you must invest in this fund only if you don't need the money in the interim. Of course, we also told you that being a closed-end fund, it's listed on the stock exchange, but we must also warn you over here that although all FMPs are listed on stock exchanges, doesn't mean that the liquidity is good in these FMPs. In fact, there's almost zero liquidity in these FMPs, which means that there are not many buyers of FMPs on the stock exchanges. The other thing that you should keep in mind is your income tax brackets. Now, for instance, if you are in a higher tax bracket, like let's say if you are in a 20% tax bracket or a 30% tax bracket, only then FMPs make sense for you. But if you are in the 10% tax bracket, or if you do not pay taxes at all, then we suggest that FMPs may not be an ideal product for you. You may just stick to your bank fixed deposits. And last but not the least, before you invest in an FMP, do take a look at its asset allocation, which you will find in every FMP's scheme of a document. You can find the scheme of a document on your mutual fund house's websites. So, in asset allocation, what you need to look at is that which are the instruments that your FMPs would invest in. For instance, if it's a 1-year FMP or if it's a shorter tenure FMP, then typically your FMP would invest in short tenured instruments like certificate of deposits, commercial papers, and so on and so forth. But if your FMP is of a slightly longer tenure, like let's say a 3-year tenure or a 5-year tenure, then it would invest in slightly longer dated securities, like let's say your NCDs or your bonds or debentures and so on and so forth. The slightly longer tenured instruments, although they are fixed income yielding instruments, are slightly riskier than your shorter tenured instruments like your CDs and CPs. But nevertheless, an FMP, if you want to make the most of your FMPs, do remember to stay invested till the FMP matures. That's all for me for today. Hope you enjoyed our Money Minutes. Do write in to give us your feedback.